Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, the bulls versus the bears. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. We're going to go through a lot of charts in this video, and you will find access to those charts on that website. So make sure you check it out. We're going to run that sale through the end of the month. Now, this is a video series that we do every few months. If we were to take a look at the last few that we did, here was one that was over a year ago where we sort of talked about the bullish case versus the bearish case. You can see one of the paths that I briefly outlined on this video did not come true, right? Because we ended up blasting through this, getting up to, this was the sort of the idea of going back to 20K sooner rather than later. We ended up going up, putting in a double peak, and then coming back down. We also talked about this, the bulls versus the bear case. This was back 2 months ago. So let's see if anything has changed since then. And then we also did a video 8 months ago when Bitcoin was at 39K, and we talked about the bulls versus the bears. So back in mid 2021 and early 2022, there was definitely a stronger case for the bears than there is today. But do the bears still have any good reasons to stay bearish, and what are the reasons for the bulls to be bullish? So we're going to go through a lot of charts. Buckle up. It's going to be tedious, but as always, I make no apologies for it. I'd rather you have a lot of information where you can make good decisions on your own for what makes the most sense for you, rather than just simply not have that information. Okay? So again, give the video a thumbs up if you like the content. We don't run, I don't run any affiliate links or ads or anything like that. Don't even have AdSense turned on. So what we're going to do is we're going to keep track. Right? I did this in the last video, and a lot of people seem to like it. So we're going to simply keep track of the bulls versus the bears. Okay? So first chart that we'll look at is a bullish one. So the bullish one is the cross of the 20-week SMA and the 100-week SMA. Okay, so you take a look here. Let me switch this over to maybe like a different color. So normally, let's just get rid of the price, right? The price is just noise anyways. If you look at the cross of the 20-week and the 100-week moving average, that marks the bottom, historically speaking. Doesn't mean it's always going to mark the bottom from here out on into, forever for Bitcoin, but at least the last two cycles it marked the bottom. And this cycle, it is at the very least, it is marked a local bottom, potentially a global bottom, but at the very least, a significant bottom. And therefore, you could argue that this, in fact, would be a point for the bulls, okay? So keep that in mind. I think this is a point for the bulls, the cross of the 20-week SMA and the 100-week SMA. Now, another one, I think I removed that. Sorry about that. So another one that I want to look at, and we're gonna try to go through as many of these as we can, is the logarithmic regression band. Okay, so this regression band, for full disclosure, was fit back in 2019, and it's only fit to sort of this data here, this data over here. It's what I call quote unquote non-bubble data, all of this data, and then it was only fit through this data right here. It never even included any of this data over here that sort of came after it. And the reason why was because I thought by fitting it through the end of the bear market, it should give a pretty good read on the accumulation phase before we go into the next bull market. Because to me, the green area is just simply an accumulation phase. I know there's a lot of anxiety when we're in it because we move up, we move down, but at the end of the day, I mean, these are small moves relative to Bitcoin. I mean, remember when we used to get excited about 30% moves, and now all it takes is about a 0.5% move for us to get excited about this stuff. But again, when you're in the lower green regression band, arguably it is a relatively attractive area to accumulate. So when we were up here, back in April, or even over here like 8 months ago or so, you could argue this was more a point for the bears than the bulls, right? Because we still hadn't gone back down to the lower regression band. But now, because we're down here, I think it would make more sense to say, all right, well, because we're in the lower regression band, it is a point for the bulls, not the bears. And with that said, not only are we within the regression band, We're at the bottom of it. Okay. I mean, if I were to zoom in on this thing, like just so you can see, I mean, this is what it looks like so far, right? I mean, like it is held pretty well so far. I will remind people that my goal all along, and I've said this for a long time, my goal will be to refit this green regression band and the red band as well here in just about a month or two, because I think it is worthwhile to refit it after every cycle just to give you a better idea of possibilities for a future cycle. The reason is because if you only fit it to say this data over here, the regression band would have been a lot more bullish. So we want to make sure that I like to at least make sure that I'm as conservative as possible. So 2 points for the bulls so far. All right, bulls are on a roll, right? I mean, it's no wonder why there's reason to to be bullish. Additionally, if you look at the bull market support band, one of the things that we talked about in the video 8 months ago, I believe, and plenty of videos since, is that normally it takes until you're in the lower regression band to actually break above the bull market support band. So like if we were to zoom in on this, normally it takes until you're in this band to actually break above it, right? It takes until you're in the band to break above it. And again, we're in the band as well. So there is at least a case to be made, whether you like it or not, that we in fact could break above the bull market support band, okay? So arguably that would also be a case for the bulls as well, because we're in the logarithmic regression band pushing up against the bull market support band. The last 2 times we did that, it was fairly bullish. Now, I will point out, and this will sort of be a caveat for the bears, is that just because you break above it does not mean it's time to go to the moon, right? It certainly does not mean that. And in fact, in 2019, it kind of did mean that, right? Because we went up to 14K. But in 2015, it certainly did not mean that. And actually, once we broke through it, we simply came back down, and we even put in a lower low on some exchanges, not all exchanges, right? I mean, I think it would just be safe to say it was more or less just a double bottom. But even when we broke through it in 2019, we still ended up having more or less a double bottom that was slightly higher that ended up coming about 1 year later. So even if we were to break through this, it does not mean that we're completely done testing it. We'll likely have to retest sub 20K at some point before we take off. But again, even with that, there are simply no guarantees. So I do want to say that as maybe a point for the bears, because they could point to just because you break through it doesn't mean it's time to go to the moon. But in the future, let's say we redo this video and like, I don't know, we'll probably redo it in a few months, but let's say we have another one a year from now. Suppose a year from now, we've come back down, or 6 months from now, we've retested, or we've even gone lower than it. Then the bears can't even point to that as a plausible reason, because we've already done that major retest. So I will say that's at least a sort of a point for the bears, but also maybe not really. But anyways, it might be some reason for them to say, well, I mean, just because we break through doesn't mean it's necessarily going anywhere anytime soon. Another indicator that gives sort of mixed results is the MACD. So let's pull that one up. And what we're going to do is we're actually going to look at this on a monthly time frame. Okay, so monthly time frame. Let's get rid of some of the other indicators that we have pulled up. We just want to make things as clean as possible. And the MACD, this is the monthly MACD, you may notice that once it turns pink, it has historically meant the bottom was in, right? So it turned pink here in February 2019, which basically was sort of a confirmation that December was the bottom. If you go back even further, right, over here, you can see that it turned pink in March of 2015, which was sort of confirmation that January was the bottom. The main problem with this, and sort of I think the biggest piece of evidence that the bears could point to as sort of like but what about this, is that normally when it turns light green, it marks the top, right? So when it turns light green over here, it marked the top back in December and January 2018. And then, if you go back to April and May, like this was April, this marked the top, right? It turned light green, so it was confirmation that this, in fact, was the top. But it wasn't, right? Like, it wasn't the top. It was a local top, and arguably, it was the technical top. Almost every single indicator says that April was the top for Bitcoin and not November. However, the bears could say, but at the end of the day, price action is all that matters, right? It doesn't matter all the indicators that we've developed. At the end of the day, the only thing that really matters is price. Because had you waited to sell your Bitcoin until November, right, you could have gotten simply a better price for it. You could have sold it for 69K as opposed to 64K. So had you assumed that this definitively meant that the bottom was in, or sorry, that the top was in, you would have been wrong. And in fact, a lot of people were wrong. A lot of people use this indicator to say that the top was in. But we ended up having a bounce back up, and we ended up going slightly higher. Today, it has turned pink in October, which would, if history is an indication, confirm that, you know, what we had a few months ago back in June was in fact a significant bottom. The problem is that, again, you could make the case, just like in the top, yes, it was a technical top. We went slightly higher later. Yes, technical bottom. Could we go slightly lower later? And I think that's the biggest question in a lot of people's minds, because there's a lot of people calling for lower prices. I am even open to the idea of Bitcoin eventually going to a lower price than it already has. I am not of the opinion that Bitcoin will ever go back to 3,500. I know that's a theory that's out there. I'm not of the opinion of that. But could we go slightly lower than 17.5 based on some, you know, recession fear or something like that? It's possible, right? Like, it's possible if the MACD is any indication, right? I mean, it didn't mark the top. It doesn't have to mark the bottom. So in this instance, I would actually say that you could give a point for both the bulls and the bears. You know, really, it's more so a point for the bulls because, again, I mean, it normally marks the bottom. It normally marks the top. But again, the bears could simply say, well, it didn't actually mark the top in 2021. Therefore, is it going to actually mark the bottom in 2022? We don't know yet. So I think we give it to either side because there's pieces of information in that metric that you could point to both sides, right? So there's some evidence there either way. So the other thing that I wanted to sort of mention is we have a logarithmic regression rainbow as well, and I want to briefly talk about this, and I've talked about this one for a lot, and the first thing I'll mention is that normally when I looked at this chart back during the last cycle, and actually back in 2019, 2020, we have videos on this, we noticed that we normally drop 2.5 log lines. That's where the peak is 2.5 log lines down from where the last one was, right? So this one's sort of in the middle of this red band up here. So if you go down 1, 2, and you go to the so if you sort of go down 1, 2, 2.5, it gets you to this one. So it's about 2.5 log lines, and then you go down again, right? You go down again here. So from like mid purple, half a log line, and then down 2, it gets you to the yellow. And so this was a metric that we used back in 2019 to say, all right, well, we'll probably go down to the light green, right? We'll probably be 2.5 log lines down. That'll be where the peak is. And then in early 2021, we went past it, right? And I was like, oh, wow, like we actually went past it. And honestly, this is where I sold most of my Bitcoin in 2021. I did not sell much of anything over here because this was a more technical top, even though we went slightly higher over here. What's funny, though, is where did 69 go? Where did 69K correspond to on this chart? 2.5 log lines down, right? I mean, went to the midpoint of the green logarithmic regression band. So then, you know, you think about this and it's like, well, where does that mean the next one is, right? Where's the next one? Well, if you go 2.5 log lines down from that one, it gets you half down to this one, and then 1, 2, you can see where that currently is, right? Like that log line that could end up being a future peak is right now, it's only sitting at like 30K. What does that mean? Well, it could mean simply you have a long accumulation phase ahead of us before we actually break out to actually hit that regression band. I mean, it could take a long time. But the other way to look at this, though, is when you think about accumulation phases for the bulls, that you generally want to be in a relatively low regression band. So the first cycle, you know, arguably you were sort of in that regression band right there. This one, you really bottomed out on this regression band, which is more or less the same one as the first one. But then this next cycle, you can see we dropped down a regression band, right? And that was the accumulation phase. And then the one after it was sort of this one, but we had a wick down to the one below it. Now we're sort of getting close to the one below it. Okay, so we had sort of 2 cycles that bottomed on this green one up here, 2 cycles that bottomed on this one. Perhaps we're now dropping to another one. If you want the exact number as to where that currently stands, it's at $16,254. However, it is a monotonically increasing function, meaning it only goes up. So in 3 months from now, that price could be 17K, right, or 18K. The longer it takes us to get there, the higher it will ultimately be. With that said, this would be a more bullish indicator than a bearish indicator, right? Like, you can't look at this and say that Bitcoin, in my opinion, you can't say like Bitcoin's extremely overvalued at these prices. Even if we do have to fall back down to this one, or if we have to go down to the one below it, right? Like if you look back, like this cycle, we held support over here. This one, we had a wick down to this one during that brief recession, right? So that's that's one thing for the bears. But if we do get a wick down, I mean, that could be that final drop that some of the bears are looking for. But again, this is not a bearish chart. This is in fact a bullish chart. So right now it's 5-2, and the 2 points that the bears have are they're sort of like they were more bullish than bearish, but again, there's something there that the bears can point to. Okay, now before we get carried away and we just go through simply every bullish indicator, let's talk about some bearish ones first, so we can kind of go back and forth. So some other indicators that do not say that the bottom is in are things like the MVRV-Z score, for instance. If you look at the MVRV-Z score, and I just sort of draw a line here at this prior bottom, and then just sort of leave that up on the screen, what you'll notice is that normally the MVRV-Z score bottoms a good bit lower than we currently are, right? I mean, like if you look, say, here in 2011, we bottomed all the way down here, and then more or less the same level during this bear market, and then more or less the same level in this bear market. This one is a good bit higher, right? Like this one hasn't come down as much as the last two. It doesn't mean that it has to, but if you simply sort of just draw a line across from where the current MVRV-Z score bottomed, then you could say that there is a reason for it to ultimately go lower, because in prior cycles, we ultimately went lower. Maybe a counterpoint is to note that in this cycle, it bottomed at minus 0.687. In this cycle, it bottomed at minus 0.598. So not too far off from each other. And then this one bottomed at negative 0.492. So far, they're dropping, or they're going up by about 0.1 or so. So it's like, around 0.7, then around 0.6, negative 0.7, then negative 0.6, then negative 0.5. If you just extrapolate that out, maybe you would think it negative 0.4 or so. So far, this one's only gone to negative 0.251. So this is a chart where, in the grand scheme of things, you can't really look at this chart and be that bearish, right? Because anytime it was at these levels, it either meant the bottom, it meant the bottom was relatively close, even though it wasn't actually in. But the bears could look at this chart and say, hold on a second, right? Like, there is a reason that we could in fact go lower if history is any indication. There is a reason why this could in fact occur. And so, in terms of sort of keeping count, I think we have to give it to the bears, right? I think we have to give it to the bears because they're looking for reasons, right? We're like the idea is that we're looking for a reason for one thing to occur over another thing, and if the reason is that it went lower in the prior cycle, then that would at least be a plausible reason for the bears to point to. Now, again, grand scheme of things, the bulls are going to say, well, even if it goes lower, it's not that big of a deal, right? But that would be, I think, a point for the bears to say that, look, every other cycle, the MVRV-Z score, in fact, went lower than it currently is today. Okay, another one that is bullish, so we'll sort of go back and forth, the hash ribbons with price momentum, normally it only flashes after the bear market is over. Now, it has mixed results once you get into the accumulation phase, sort of flashes all the time. But if you look at, say, like 2011, 2013 bear market, 2018 bear market, it doesn't flash until after the bear market is over, until after the bottom is in. That's the distinction. It's not like, oh, it flashes close to when the bottom is in. It always flashes after the bottom is in, right? After it. After the bottom is in, not before it, not a week before it, not 3 weeks before it, just after it, right? Just after it. And in fact, this one flashed back in August of 2022, right? It's a point for the bulls, right? I mean, I don't control what it is. It just is what it is. It's a point for the bulls. Okay. So far, plenty of examples for the bulls, few examples for the bears. What's another example for the bears? Because there's more. I think one of the ones that is interesting is the Bitcoin percentage of supply in profit and loss. This one's kind of hard to look at because it's all over the place. But there's a trick, right? We can apply a moving average to it, and it cleans it up. What does this show you? The bottom was not in until after the 30-day SMA of the profit and loss, supply of Bitcoin and profit and loss crossed, right? Over here, it took until after this cross for the bottom to be in. If you go back and look at this cycle, it wasn't until after these crossed that the bottom was in. In 2018, it wasn't until after they crossed right here that the bottom was in. So they crossed right here, and then the bottom came a few weeks later, or maybe just a few days later. Like it crossed December 7th, and then we bottomed like, mid-December. Hasn't crossed yet, right? Now, they have crossed if you don't apply a moving average, but if we zoom in, they just keep sort of flirting with each other, but not really committing, not really committing to the relationship. But if you apply a moving average to it, you can see that it's still not quite there, right? It's still not quite there. So yeah, I mean, in the grand scheme of things, it's not a bad thing that it's, getting close to 50-50. Normally this is a good thing for accumulation, but I think the bears could simply point to this and say, there is a reason that we could in fact have another low, right? If this chart is any indication. So it's a point for the bears, right? It's just simply a point for the bears because that chart shows you that we could in fact have a lower low. And if we did have a lower low, it would make this chart complete, right? The cycle would be complete. Let me get one more in for the bears and then we'll go back to the bulls. So another one for the bears is the balance price. What you'll notice is, and let me get rid of some of this stuff. What you'll notice, this is the price of Bitcoin, the blue line. You'll notice that every bear market, the bottom occurs when the price of Bitcoin has daily closes below the balance price. Okay, you can see it happen in 2011. If you go over here, you can see it happen in 2015. If you go over 2018, you can see that it happened there, right? Like the bottom was not in until after it went down. You might have thought the bottom was in November, right? We went to 3.7K and we bounced back up to 4.2K, but no, the bottom was not in yet until it went below the balance price. So has it flashed yet this cycle? It has not, right? We have not gone below the balance price. And the problem right now is that the balance price continues to go lower, right? I mean, so if we're gonna go below it, it'd be nice to do it sooner rather than later. Of course, I mean, if the price of Bitcoin starts going back up, it would make the balance price go back up as well. But you zoom in here, where is the balance price currently sitting? It's currently sitting at 15.88K. Okay, so for the price of Bitcoin to go below the balance price, we would need to go below $16,000. If we don't go below it, it will be the first time during a bear market that we do not have a daily close below the balance price. If you look at if you look at the realized price, the accumulation phase is during this phase, right? It is during this phase, but normally it did not mean the bottom was in until we had that daily close below the balance price. Therefore, it's not a point for the bulls, right? I mean, I think it would be a point for the bears because they can simply say, look, historically, the bottom was not in until we went below the balance price. We have not gone below the balance price yet. Therefore, it would remain prudent to be cautious and say, you know what, we could still have a potentially slightly lower low. Now, listen, I mean, you could have a lower low at 15, 16K and that be it, right? There's no guarantee it's going to go down to $10,000 or something. You could go slightly below the balance price and then that's the bottom. That's historically what has occurred. I mean, it didn't go that much further below it. I mean, again, if you look, if we get an idea of how much further below we went, right over here, by the time we went below it, the balance price was $2.45. That kind of stings a little bit, right? But the price of Bitcoin actually went to was $2.11. So I mean, it went below it, but not by a lot. Here, the balance price was around $220. The bottom was around 175. In 2018, the balance price at that corresponded to the bottom was at 3.42K. We went to 3.19K. So yeah, I mean, could we go slightly lower than 16K? Could we go to 14K, 15K? It's a possibility according to this chart, right? Again, it's not according to me, it's just according to this chart. So something to keep in mind, you can take the price and divide it by this metric, right? You can take the price and divide it by this metric, and you can see that normally we go below the balance price, and it just simply has not occurred yet. Is there a case to be made that each time it gets a little bit better? Maybe, right? Maybe that's the counterpoint, that each time it's sort of like if you think about drawing an uptrend line here, maybe that's the counterpoint. But I still think you could look at this and say it is in fact a point for the bears. Okay, so we're now 6-5, but I know, and you know, there's more bullish indicators than bearish. So why don't we go back to some bullish indicators? So another bullish indicator, the Pi cycle bottom and top. Actually, this is one that it could go either way. Okay, so I'm going to give it to both the bulls and the bears, because if you look at the Pi cycle top, it called the April top to the T, right? I mean, it got it. It got it. I mean, it was in what, a couple days, maybe like 2 days of the top, but it wasn't the top, right? Like we went to 69K. So the bottom, according to this, occurred over here at 19K or so. Is it the bottom, right? Or is it a false bottom? Just like this was a top, but then it ended up being sort of like a false top because we ended up going slightly higher later. So I think you could argue that this is it's sort of like one of those things where, like the MACD, it's similar to the MACD, the monthly MACD. It is usually a point for the bulls. There is a caveat in there that I think the bears could point to and say, well, it didn't technically call the top, so why does it have to technically call the bottom? It may be called the technical top, but not the actual top. So maybe it calls the technical bottom, but not the actual bottom. I mean, look, I don't want to get into all sort of the nuances of it. I do think it is more a point for the bulls than the bears. And because I mean, I struggle to give that to the bears because, you know, just because every single indicator sort of missed out on the top doesn't mean they all have to miss out on the bottom. So since I gave it for the MACD, why don't we just say it's a half point for the bears on the MACD and a half point for the, you know, for that one to add up to a full point. So we'll just keep it 7-5. I think that's sort of like a fair compromise to give a half point to the bears on both, just because they didn't actually call the top. So do they actually have to call the bottom? Another one is sort of the RSI. So the RSI of Bitcoin, if you look at the daily RSI, it's sort of all over the place. If you look at the weekly, it gets cleaned up a little bit. This is simply a point for the bulls. I mean, there's just no way around it. Normally when you hit the green band, it is a good thing for the bear market being over. So that's a point for the bulls. The only counterpoint is the monthly RSI. I think this is probably the biggest counterpoint. We're going to keep it for the bulls, okay? So I'm not going to change it. But the biggest counterpoint is if you sort of draw a line across, there is a case to be made that what if we hold resistance on the monthly RSI and where in the past we actually held support, right? Because we're below it. I mean, the last two cycles bottomed at an RSI on the monthly time frame that's still higher than where we currently are today. Is there not a chance that at some point in Bitcoin's future we go down to the oversold on the monthly time frame? There is a chance that eventually happens, and maybe it happens this cycle. I think it goes to the bulls, but I just want to mention that caveat in here so that you're aware of it, right? I mean, like the monthly RSI is simply lower than it was in either of the last two cycles, and as of now, it has not shown the ability to actually get back above it. So we will give it to the bulls, but if you are a bear, I'm sure you're actually looking at that nuance of that metric, and I think it is a relatively valid nuance to at least consider. If you look at golden crosses and death crosses, I think in general, so a golden cross is when you get the cross of the 50-day and the 200-day. Normally, you like to see that after the bear market to sort of say that it's over. but in 20, I mean, like in 2014, you actually had a fake golden cross. I mean, you had a golden cross, but it didn't mean anything. It actually didn't mark the bottom. So far, we haven't even had a golden cross. So I would say that's a point for the bears. Not to say that it can't happen. Like there's actually a good chance that we do get a golden cross at some point in the next 6 months, but it hasn't happened yet. And I think the bears could simply say, well, you know, it hasn't happened yet. Doesn't mean it's not going to happen, but it is at least something they can point to say we have in fact not had a golden cross just yet. Furthermore, whenever we do have a golden cross, normally the price dumps on the day that we actually have a golden cross. So that's something to consider as well. Continuing on, the running 1-year ROI. Okay, so this one historically bottoms at 0.2, right? Historically it bottoms at around 0.2. We're not there yet, right? We haven't hit 0.2. Doesn't mean we're not going to. It also doesn't mean we ever will. But how do we get to 0.2? Well, I mean, you know, 13, 14K is about 80% down from the prior all-time high. But the prior all-time high happened like, you know, early to mid-November. So the best chance to see it go to 0.2 is for us to go down very quickly to actually get that 0.2 reading on here. Otherwise, it's going to get harder and harder to reach it. I mean, like, think about it like this. If to go down to 0.2 from 69K, it's coming up relatively soon, right? You'd have to go down to 80% down, which would get you to around 13.7K or so. Okay? If it doesn't happen there, where does it happen, right? Like, maybe it happens in Q1, and then you'd measure it from 48K, but to get down to 0.2 from 48K, the price of Bitcoin would actually have to go sub 10K, right? I mean, you know, maybe the Gap boys have the last laugh. I have a video back in 2020 where, and I mean, it's on the receipt is on the channel, where Bitcoin was testing the 20-week SMA as support, and we had a lot of people. I mean, a lot of people saying that we were going to go down to $9,600, and the reason was because they were pointing to the CME gap on the daily time frame. Right, they were pointing to this. There's a CME gap here on the daily time frame that Bitcoin needed to go back to $9,600. And I said, I was like, look, guys, you know, is it really worth not buying Bitcoin at 9,900 so that you know, is it really worth waiting to 9,600 so that you fill the CME gap, or why not just buy it here at like 9,800, 9,900? Like, wouldn't that make more sense? I mean, because what if we hold this as support? We were hoping we would hold it as support so that we could begin the bull run. Because normally you need to get above the 20-week SMA, and then you actually need to hold it as support. And the Gap boys were not right? And I mean, you know, I kind of poked fun at them because I'm like, look, guys, I mean, there's no reason that this has to fill the CME gap on the daily time frame. What if you're wrong and you literally missed out? You refused to buy Bitcoin at $9,900 or $9,800 because you were so convinced it was going to go to $9,600. After Bitcoin went to 64K, probably didn't really make that much sense to squabble too much over a couple $100s. But if the running 1-year ROI doesn't hit let's say if it does hit 0.2, but it doesn't in November, if it hits it in March of 2023, I mean, that means maybe the Gap boys get the last laugh, right? I mean, maybe it's like revenge of the Gap boys in Q1 of 2023, and then that forms the actual bottom. But I mean, no matter how you look at the 1-year ROI, the running 1-year ROI, normally the bottom occurs on the 1-year ROI at around 0.2, and we have not gone that low yet. So far, the lowest it has gone is actually 0.287. So is it close enough? Maybe, right? I mean, maybe you would argue that's close enough. And arguably, if you're looking at a long-term accumulation phase for Bitcoin, it probably is close enough. But I still think a lot of bears could look at this and say, we could easily have another low, and it would finally sort of check this box off on that chart as well. So that is, that's at least one more to consider, I believe, for the bears. Okay, is that the 1-year ROI has in fact not yet hit that, that 0.2 level. I mean, to give you exact numbers, over here it actually went down to 0.163. In 2015, it was 0.205. And then in 2018, it was 0.164. So, I mean, again, the lowest it's gone so far is 0.287. So that's kind of higher. It's kind of higher. But it's still a point for the bears. We've talked a lot about diminishing returns, right? A lot. about diminishing returns on this channel. And in fact, I feel like I was one of the few people in 2021 that said we weren't going to 100K. Back then, I thought the earliest we would go to 100K was by, probably by 2023. I don't really think Bitcoin's going to go to 100K next year anymore. I think the earliest it could plausibly happen will be 2024. But diminishing returns is a thing, whether we like it or not. Meaning it's going to be a thing next cycle too, okay? But one of the nice things, though, is that you also experience diminishing losses, right? I mean, this was 94% down, the first bear market. The second one was about 87% down or so. The third one was 84 from the top, about 84% down. This one so far is 74% down. Now, if you're a bull, you just say, diminishing losses, right? I mean, like, why can't it just be 94, 87, 84, 74? Why does it have to go down 80-something%? Is there a trend there that we can extrapolate from? Maybe, right? I mean, honestly, I think it's a point for the bulls. I mean, I'm just going to be completely honest, right? It's a point for the bulls. Now, the thing is, though, is that even if Bitcoin does end up going to, say, 15K or something, let's say it does, that's still diminishing losses, right? Like, it would still be 80% down. It would still be diminishing losses. So you could still argue that even if Bitcoin goes to, say, 14K or 15K, you still in fact have diminishing losses, even if it slightly goes to a lower price than it is today. Regardless, it is in fact a point for the bulls, and now the current tally is 9-7. Let's continue on. The ROI after cycle peak, I'm going to go ahead and tell you up front, it's a point for either side, okay? So it's a point for the home team and the away team, a point for the good guys and the bad guys, not clarifying who's who, right? But if you're a bear, then I'm sure you think the bears are the good guys. If you're a bull, I'm sure you think the bulls are the good guys. But it's a point for both teams. And the reason is because if you measure it from November, it looks like a pretty standard bear market. I mean, heck, the 2014 bear market even had, with the ROI from peak, meaning the drawdown from the peak, was actually at this level. Actually a little bit better than we are today. And it did not stop the bottom from falling out in January of the following year, right? So it had sort of that, that seasonality of Q4. Like if you go look at it over here, you can kind of see that we sort of had a rally, right? From like September, October, November, and then we flushed out December and January, and then the bottom was in. Sort of similar to today, right? I mean, like it's not guaranteed yet that just because we're going up here means the low is behind us if the 2014 bear market is an indication. So you say, why is this a point for the bulls? I mean, it looks like a point for the bears. Well, the reason it's a point for the bulls as well is because, again, April is a somewhat more technical top. So you could measure this from April, and in this case, this could be the bottom right here, right? And you could say that this actually lasted longer than the last two bear markets if you measure it from April, and say that we're just simply in the accumulation phase. If you go 3 months out from that point, and it doesn't really look that dissimilar from what we saw before. If you measure it from November and you go 3 months out from that point, it still seems like we could have another leg down. Wherever you measure it from, whether you measure it from April or November, if you take this out to the next peak, look, it's just noise, right? Like it just simply likely does not matter. The truth is that you likely are going to have a good part of 2023 to accumulate Bitcoin, regardless of whether the bottom is in or not. Like regardless of whether 17.5 is the bottom, you are still likely going to have a good part of 2023 to accumulate. It's the same reason that when you go look at this chart over here, like we spend a lot of time being undervalued when we go to the undervaluation territory. Right? It's not we just go there and then we're out of it immediately and we never go back. No, I mean, yes, in 2019 we did briefly go up for a while, but still we eventually came right back down and actually tagged the bottom part of the lower green regression band more or less. So again, I think in that situation it is a point for the bulls and the bears. But again, with that said, the bulls are still leading the race 10-8. What are some other indicators that we could look at? So we've looked at this one. Let's go. Okay, so we've looked at, some of these aren't as, I don't think some of these are as useful. I mean, here's like the minor capitalization divided by thermo capitalization. The reason why is because like there's not really a clear trend. Like these more or less bottomed out around the same level. This one jumped up a lot, so you could argue this one could jump up as well. The bears could simply say, well, you know, it could also just go back down to the same level it was last cycle. I don't really know if that is either direction. So we've covered a lot of these. The moving average one might be interesting in terms of we're below the 200-week SMA, which is likely a point for the bulls. I mean, normally if you're below the 200-week SMA, it's a good thing, right? Not a bad thing for Bitcoin accumulation. So might as well give a point where it is due and just say that it's a good thing. The bears might say, well, it's not a good thing. It shows weakness that Bitcoin's actually below the 200-week. But I actually have a theory around that as to why it makes sense that we're below the 200-week. If April was sort of the technical top. Had we just come down then, the 200-week SMA would have been at like 14K, right? Like it would have been at 14 or 15K. But because we had this double peak, it gave the 200-week a lot more time to come up. So by the time we actually got to it, it was much higher. It was already over like 22K or something. So that sort of messed it up. Furthermore, last cycle, we went to the 300-week SMA. So it's not like it's unheard of to go to the 300-week. We're spending a lot more time at it this time. I think there's a chance that before all this is said and done, we could go to the 400-week moving average before we actually have a sustained move back to the upside. That doesn't necessarily have to constitute a lower low, though. Let me explain what I mean by that. If you look at 2018, we bottomed at the 200-week SMA, even though we went later to the 300-week. But by the time the 300-week was hit, the 300-week was actually higher than the price was when we hit it at the 200-week. So, you know, you could have a situation where the 400-week sort of continues to sort of slowly come up here. Maybe Bitcoin bounces around for a while, and then we get some recession scare in 2023, which I think is a good possibility. Maybe we come back down and then we blast off, and maybe it's a slightly lower price than we've come to before, or maybe it's not, right? Maybe it goes to the same price and then we continue on up. But I think that is a point for the bulls. So I mean, we gave it to the bulls because I think ultimately being below the 200-week SMA is a relatively attractive place to be in terms of accumulation of Bitcoin. So we have covered a lot, right? We've covered a lot. The Puell multiple. Has that one bottomed? Well, maybe not, right? I mean, this is one of those things where I think a bull would look at this and say, yeah, it's a relatively attractive level. A bear would look at this and say, yeah, well, I mean, we haven't really gone as low as we normally do. Like if I just sort of hover a line across the prior bottoms, like look at 2011, look at 2015, and then look at 2018 as well, we sort of tagged that sort of horizontal line that you see on the screen right there. It has not yet been hit this cycle. We got close to it in June, but it simply has not yet been hit. So it's a point for the bears, right? Because it hasn't, that sort of horizontal support line on the Puell multiple, we have not yet reached it. It doesn't mean we have to, but we haven't reached it yet. And I think this is one of those that simply the bears could say, look, yeah, it's a point that we've gotten close to it, but we actually haven't hit it. So you need to be somewhat open-minded as to whether it could in fact be the bottom or not. So we've covered a lot. Like we've covered quite a bit. I mean, as you guys know, I have like the risk level stuff as well. We'll talk about that. We'll do a deep dive more on that in another video. But arguably, I mean, the current risk levels are relatively low, all things considered. Maybe some other ones are things like the fear and greed. So if you were to take a look at the fear and greed, let's get out the raw values and take, say, like a moving average, like the 90-day EMA. It's a pretty good time, right? I mean, like the 90-day EMA does not usually come down this low. So I think that, in fact, would be a point for the bulls, not the bears, because you can see just how low it came back in June, pretty low level. So I think that point would in fact go to the bulls, because just how low the fear and greed has come so far. Doesn't mean we can't have another scare, by the way, but it is something to consider. Let me see if there's some other ones that I could, that make some sense here to discuss. And remember, if you guys want access to all these charts, we do have the sale on Into the Cryptoverse Premium down in the description below. And you'll get access to all these charts. We have tons of charts. We have on-chain charts for for a lot of cryptocurrencies. So here's the price drawdown from the all-time high. See, this is one of those ones that I feel like is a point for the bears. And then I'll tell you the reason why. If you look at the last 2 cycles, we sort of hovered here around 60 to 70% down for a few months, and then the bottom fell out. Again, 2018, we hovered at around 60 to 70% down, and then the bottom fell out. And then again, we've been hovering at around 60 to 70% down. So I think you could look at this and say that it's more so a point for the bears than the bulls. But again, I mean, I think the bulls still have a somewhat decent lead. I mean, I think if I were just to continue on forever, you know, you're going to find indicators for both sides, but I think you're going to likely find more for the bulls than the bears. I think that's just simply, you know, a fact. That if you simply look at all of them, that is likely what you would see. One thing to consider are things like there's sort of these narratives right now about the hash rate. The hash rate is going up quite quickly, and that could be a problem. Hash price, hash rate. That could be a problem for miners, right? Like that might not be the best thing because it's going up extremely quickly right now. Take like a moving average of it. You can see how quickly it's going up. And the problem is that if it goes up too quickly and miners are under pressure, and if they're at a loss, if they're operating at a loss, then it can lead to miner capitulation, right? I mean, you can see it was moving up really quickly through here as well, and then it capitulated. But you could argue that we already had some type of miner capitulation. I think some people are saying we could have a second miner capitulation. I'm not going to give that to the bulls or the bears because, I mean, I think you could make the case either way. If price stays suppressed long enough and these companies continue to operate at losses, eventually they might be forced to sell. Or the counterpoint would just be, well, if Bitcoin goes back up to 30K or something in 6 months, then maybe they don't have to, you know, maybe they don't have to like fear sell or they don't have to feel compelled to sell just to keep their, you know, keep their business afloat, or maybe they're just, you know, going through bankruptcy or something like that and they're forced to sell that way. But I don't really think that one is either sort of on either side. I think it, you know, you could take it either way. Now, at the end of the day, right, there's a lot of points for the bulls. There's a lot of points for the bears. There are more points for the bulls. If we go lower, okay, let me say this. If Bitcoin goes lower, and by the way it could go lower is, you know, you could have a rally up to the 200-week SMA first. Like maybe Bitcoin goes to 24K or 25K or something in the short term, and everyone thinks the bottom is in, and then we have a nasty Q1, and then the bottom's in, right? Or something like that. Or you get something like what happened over here in March of 2020. You could argue that we would have gone lower had the Fed not started printing money, and we would have had a lower low, right? But the Fed started printing money. Which brings me to my next point. Bitcoin has never experienced high inflation. Okay, what happens if we get a recession again, which this was a very brief recession? What happens if we get a recession again? The Fed can't print our way out. That could be somewhat scary. So for the pure Bitcoin indicators, right, excluding all the macro stuff, I think the bulls do have a more compelling case than the bears. But that doesn't mean we won't see another lower low. It does not mean you can't see another lower low. If you do see another lower low, you're going to see a lot of these points come over to the bulls. And if that happens, then it's just simply more and more people are going to get bullish, and then we're going to go through another bull run. Okay? Keep that in mind, right? More points for the bulls than the bears today. And arguably, if I were to go through all the other indicators that are, you know, that you could plausibly go through, because there's a lot, I think you could find a lot more for the bulls than the bears. I mean, you know, maybe 50% more for the bulls than the bears. But it doesn't mean the bears are not going to see a lower low, but it also doesn't mean the bulls aren't right either. So there's the evidence for it. I mean, some people probably want me to say definitively one way or not, you know, one way or another what's going to happen, but I don't know. Like I simply don't know exactly what's going to happen. I do think it's worthwhile to review the evidence, and I've at least presented the evidence for you. You should know at this point why people are bullish, but you should also know why people are bearish. There's plenty of reasons for either case to be made, arguably more for the bulls. The biggest case that the bears have, other than the indicators that I showed, are the macro conditions that look relatively bad. Okay, it looks relative. Some of the macro charts, and we've gone through a lot of those before. Those look relatively bad, and the Federal Reserve, they're draining liquidity right now, right? Like they're draining liquidity. Bitcoin has never been in a position like this before, right? Like it was born out of the financial crisis of 2008. It was born out of, realizing just how ridiculous the fiat system can be. That was what it was born out of. But Bitcoin's also never experienced a longer stock market bear market. It's never been through one of those. So we simply do not know how it's going to hold up. The S&P 500 has been putting in new lows as of last month, right? I mean, simply as of last month, the S&P 500 was putting in a new low. If the S&P continues to drop, right, and it does this, if it does something like this, if that's the case, the question is can Bitcoin handle that? Can Bitcoin hold 17.5 forever if the S&P continues to drop? If you go look at the charts for the S&P 500 and you look at the return on investment from the peak, and we get rid of everything but 2022, this is what it looks like. If you compare it to the financial crisis, it looks pretty similar. If you compare it to 1946 to 1949 when we had high inflation, it looks pretty similar. They both look pretty similar, but which path is it going to take, right? Like, is it only going to go slightly lower like 1946 to 1949? Or are we going to have a major financial crisis and we're going to see a major leg lower? We also had high inflation in the 70s, and that bear market went a lot lower as well. It sort of followed along for a while, but then it eventually broke much lower. So that's the question. Can Bitcoin hold at 17.5 if the S&P 500 is about to have a major crash to the downside? If you look at the min and max sort of ROI from the peak for the for these bear markets, and I did a video on this the other day. This is a pretty average bear market for the S&P 500 so far. But if it continues on in a bear market throughout 2023 as well, like if it goes all the way out, let's say like 700 something days, which could be the case if the Fed pushes us into a recession, and it seems like they want to do that to get inflation back down. That's the question, right? Like, can this continue to go down for months and months and months, and Bitcoin still hold the prior lows? That's the $1 million question, right? And we've never experienced that before, so no one really knows the answer. I think it would be safe to say that the fact that Bitcoin has held up so far is somewhat impressive, right? It's somewhat impressive that it's held up so far. But what if the S&P goes to 3,000 or something? What if it drops 50% from the all-time high? Can Bitcoin hold when something like that's happening? And I don't know the answer to that. I would, if it does hold, I think you're still going to, at the very least, see retests of the prior lows, if not a slightly lower low. And I think that's what is the biggest thing to consider here. If there is a slightly lower low, like if Bitcoin comes back down, and let's say it does something like this where we either, let's say we rally for a little bit and then we kind of come back down and we put in a slightly lower low. A lot of people might be then waiting for like 3K or something, but like there's a good chance that if something like that were to happen, that could easily be the bottom if the bottom's not already in, right? Like if the bottom's not already in. And if that happens, then you're essentially going to have a repeat of what happened over here, right? Where you have a technical top and then sort of like a fake top that was only created because of like outstanding circumstances, people being leveraged out of their ears. And then maybe you have a technical bottom and then some lower low because you have some like big recession scare. Or I mean, we probably would. I mean, but you might go into we might go into a recession, but then that could be where Bitcoin actually bottoms. That's where the stock market normally bottoms. So again, at the end of the day, from a pure technical indicator standpoint for Bitcoin, I think the bears are winning. From a more macro fundamental perspective, I think the bears have a decent case to be made. I think there's a lot of information in this video that you need to think about. As I said before, 20K for Bitcoin. I think if you're looking at this video in, let's say 2025, right? Like a little over 2 years from now, because we're almost in 2023. If you're looking at this video in 2025, the idea of Bitcoin being at 21K is probably like a pipe dream, right? Like you're probably much higher. If you're looking at this video in 3 months, who knows, right? Who knows where exactly we're going to be. So take that for what you will. That's the evidence in the charts. We've tried to cover both bases, try to be as objective as possible. I'm not trying to push any specific narrative. I think both sides have a valid case. The bulls have more of a valid case based on the indicators for Bitcoin alone. The bears have a better case based on the macro, but we also simply don't know how Bitcoin is going to behave under these macro conditions. Maybe it'll be seen as a safe haven, maybe it won't. But I think that'll wrap it up for the video. I think we've gone long enough. Again, a lot of the charts you see, you can access them at intothe-cryptoverse.com. We also have thousands of charts, like for all sorts of cryptocurrencies that you can access. We even have a workbench that you can use, right? You can go over here to a workbench and make all sorts of indicators and combine indicators and subtract them from each other and all that sort of stuff, right? You can compare the 1-year ROI of Bitcoin and Ethereum and kind of see, how do they stack up against each other? You can look at the risk weighted by the drawdown and sort of see that kind of stuff. I mean, this one might be another one for the bears because normally we go sort of well below this level. But again, I mean, this is again, we could go on and on. A lot of indicators for the bulls, less for the bears, but it doesn't really necessarily mean anything regarding whether we have to or have to not go to a lower low. It's all about what is the probability of it happening and how do you want to manage your risk as you go forward. I do think in general 2023 will be a good year to accumulate crypto in preparation for a hopeful bull market sometime out in 2024. 2025. We'll wrap it up there. Make sure you guys subscribe if you're not subscribed. Give the video a thumbs up and check out the sale on Into the Cryptoverse Premium at intothe-cryptoverse.com. See you next time. Bye.